Before we begin, I would like to take this opportunity to welcome those joining us via video conference and ask that they observe the following etiquette. Please state your name before you speak, mute your phone when not speaking, and keep background noise to a minimum. Members, we will begin with a roll call to ensure that we have a quorum. When I call your name, please respond to confirm your attendance. Mr. Javed Anwar? Mr. Cody Campbell? Dr. Fred Farias?
Here.
Ms. Emma Schwartz?
I'm here.
And myself, Ricky Raven. So do we have a quorum? And Stuart is here. And the chairman, Stuart Stedman.
Yeah, I'm here, but I'm on the committee.
Yeah, you ex officio. Okay. Please record in the minutes that we have a quorum. Agenda item 2 is approval of the minutes from the July 22nd, 2020 Agency Operations Committee. Do I have a motion for approval of the minutes?
So moved.
I have a motion made by Mr. Campbell. Second? Second by Chairman Stedman. Any further discussion?
That was Fred made the motion.
Oh, sorry. Sorry, Dr. Farias.
That's okay.
Let the record reflect that Dr. Farias made the motion, second by Chairman Stedman. Chairman Stedman. Any further discussion? Members, when I call your name, please state whether you are voting aye or nay. Cody Campbell. Dr. Farias.
Aye.
Ms. Schwartz.
Aye.
Chairman Stedman. Aye. And myself, Ricky Raven, I vote aye. Motion passes. Agenda item 3 is public testimony. We do not have anyone registered to testify today, so we will go to the next item. Agenda item 4 is approval of the consent calendar. We do not have any items listed for consent today, so we will go on to the next item, agenda item 5A. It is a report on grants and contracts, including those exceeding $1 million. This item does not require any action. Members, the reports were included with the agenda materials that you received prior to the meeting. Ms. Linda Natal, Director of Contract and Grant Management, and Ms. Nicole Bunker Henderson, General Counsel, are available if you have any questions. Are there any questions from any members? Hearing and seeing no questions, we will move to the next item. Agenda item 5B is an update on agency preparation for the 87th Texas Legislative Session. This item does not require any action. Mr. John Wyatt, Senior Director for External Relations, represents this agenda item and is available to answer any questions. Mr. Wyatt.
Thank you. Good afternoon, Chairman Raven and board members. Today, I'd like to update you on agency preparations for the upcoming Texas legislative session and answer any questions that you might have. As you know, the next legislative session will convene on January 12th of next year. I think it's very safe to say that this session will be unlike any session that has come before it. The pandemic has already drastically altered where the legislature would normally be in terms of preparing for session. Usually at this point, committees would have held multiple interim hearings.
I can't hear John. Am I the only one? I can't hear you.
We can hear him.
I can hear him.
We can hear him.
Can you hear me now, Ms. Williams?
Can you hear him now, Donna?
I can
Maybe
hear
the
you, Ms.
administrator put us all on mute.
No, I don't think so.
Can you hear the rest of us?
I don't see the mute. Can you hear me? Can you hear me? You're on mute.
I don't think she can hear any of us.
We can use the chat function maybe if we're online to see if she can hear us. Would you like me to chat, see if she's available?
Please, thank you.
Well, actually, the chat's disabled by the host, so I can't do that.
We can send a chat from here, sir.
Thank you.
Ms. Williams, can you hear us now?
Yeah, Miss Williams didn't have her speaker on. I'm sorry.
Okay.
Never mind.
Technology, right?
Well, Mr. Wyatt, why don't you start over again so that Ms. Williams can receive your message?
Absolutely. Thank you, Chairman. As I was saying, we have our legislative session will be starting on January 12th of this coming year. And obviously, this session is going to be very unlike the sessions that have preceded it. Usually at this point, committees have held multiple hearings on their interim charges, and they have met to come up with recommendations for the legislature to consider at the upcoming session. But the onset of COVID changed all that. Since the onset of COVID, the Texas House has not convened any interim hearings. Rather, they provided a mechanism for stakeholders to make written submissions to those committees on interim charges. And the coordinating board did make submissions on several interim charges before the House Appropriations and House Higher Education committees. The Texas Senate actually recently held a hearing of the Higher Education Committee. Only senators and staff were permitted in the committee room. The witnesses, including Commissioner Keller, testified over Zoom. Both the Texas House and Senate are still refining their protocols for how they're going to ensure a healthy and safe environment during the legislative session. We don't have a lot of information right now on what that's going to look like, but there are some assumptions we can make. One safe assumption is that we will see greatly curtailed physical access to the Capitol, including member offices, committee rooms, and the galleries. That due obviously to new social distancing requirements that could entail limited access. There's a possibility that witness participation in hearings will be virtual, as we saw with the Senate Higher Education Committee. And the pace of the legislative process is very likely to be impacted by these protocols, potentially meaning that fewer bills and possibly many fewer bills will actually end up making it through the legislative process this session. But while a lot of the logistics about the legislative session are up in the air, the role of the coordinating board is not. Whatever arrangements are made, the commitment of Commissioner Keller and this agency is the same: to work collaboratively with policymakers and institutions, and to provide objective, insightful data and analysis to inform decision-making at the Capitol. In keeping with our agency's shift away from a more regulatory posture to acting as a partner with and advocate for higher education, the way the coordinating board approaches session will look a little different this time. Rather than promoting an explicit coordinating board legislative policy agenda, we will focus on assisting the governor's office and legislators in refining and advancing their agenda for higher education. As the commissioner has directed since he first took office, our aim will be to deploy our resources in partnership with policymakers and institutions to help identify and define challenges and to collaboratively develop innovative, enduring solutions. A template for this approach involves the allocation of federal GEAR funds. Commissioner Keller and the agency staff worked very closely with the governor's office and legislative leadership to develop a thoughtful approach to using these funds, and came forward collaboratively with an approach that met students' immediate financial needs while also investing in an educational infrastructure that will support a strong economic recovery. Another way that we will assist policymakers this session is by using our data resources and our expertise to help inform their decision-making. As you know, Commissioner Keller has put a strong focus on making our data accessible and useful to stakeholders. The agency will develop objective data, presentation materials, and other assets that will be directly relevant to legislative decision-making. We will then use them to help decision makers have full information regarding the potential impact of different policy options. Finally, although we plan to take a more nuanced approach to legislative policy proposals, we are going to be working very hard to make the case to the legislature for strong appropriations support through the agency's legislative appropriations request. As the state faces a potential revenue shortfall, it is critical that policymakers understand the importance of the state's investment in higher education as a driver for economic recovery and growth. We will emphasize the importance of the agency's exceptional item requests as specific, targeted investments to serve the needs of students and families, institutions, and our state economy. As a reminder, you adopted our legislative appropriations request at your last meeting, and that included exceptional items to restore the 5% funding reductions for the next biennium, additional investments in student financial aid programs to keep up with demand, funding to build upon GradTex 2.0 and scale engagement efforts to reskill and upskill Texans, information technology funds to secure agency data and to increase the value of our IT assets, and funding to cover costs associated with the agency's relocation to the Capitol complex. As always, during the legislative session, we will regularly update board members on developments at the Capitol, and we'll look to you for your leadership, guidance, and support. And of course, we will provide you with one-pagers, talking points, and other preparatory materials to help you successfully engage in this process. With that, I'd be happy to answer any questions you might have.
Thank you, Mr. Wyatt. Members, do anyone have any questions? Mr. Wilson? All right. Anyone else? All right. Hearing none, we will move on to the next item. Thank you, Mr. Wyatt.
Thank you.
Agenda item 5C is consideration of approving the acquisition of a 4-year contract for managed print services. Ms. Jinjin Sun, Assistant Commissioner and Chief Information Officer, Information Solutions and Services, will present this item and be available to answer questions. Ms. Sun.
Thank you, Mr. Chairman, board members. So this agenda item is to seek the board's approval for the agency to issue a statement of work through the Department of Information Resources for a new multi-year contract for managed print services. Currently, the agency is in the last year of the 4-year contract with Linkverse Technologies. To ensure business continuity, we need to select a new vendor for the next contract this year. So when drafting the statement of work, the staff will take into consideration the new normal due to the COVID-19 and also the timeline for the agency's move to the new state capitol complex building. This concludes my briefing to the board, and I'm happy to answer any questions that you may have.
Thank you, Ms. Sun. Members, do you have any questions for Ms. Sun? Chairman?
Yeah, Ms. Sun, so what exactly is this? It's like copying and stuff?
These are the multi-function printers that I think there is one outside the boardroom in the hallway.
Like
yeah, well, we have other other printers to print all these agenda materials, but these are the printers used by the staff member on a daily basis to print documents.
Okay.
Is this for a lease? Is this a lease cost or purchase?
It is a leased contract. Currently, we have 24 units in our building.
And will that number remain the same, or will it go up or down? Or?
We are going to reduce the number of units, especially now we're going to move into a new building, and also we look at the volume, especially due to COVID-19. We see a decline in the number of print copies ever since March this year. So, and also we're trying to work with the business areas to go electronic, so we don't have to print all these documents in paper.
Yeah, I mean, Texas FAFSA is going finally online, and so you think that the paper would decline. But I do like these books when they send them out, so that's probably not your department.
So do I.
Yeah.
And we will continue, of course, to provide these agenda books to the board members.
Have we considered a shorter-term lease through when we move, and then start a new one in the new location, and not, or does this one envision the relocation cost of all this equipment when we move?
We're open to different options. We're working with the Department of Information Resources. We're also talking to other state agencies to see how they deal with the COVID-19 situation, and also some agencies has already moved to the new building, and we're trying to learn lessons and experience from them. So to answer your question, it depends. We're going to issue the statement of work and see, trying to get the best fit for the agency.
It seemed like it would be, if you split it in two pieces, you could, while you're still running the equipment here, they could be setting up, so the day you move in on the move, you have equipment up and running. They don't have to unplug and go through the downtime.
Yeah, and there's another possibility. We can also have the vendor cover the moving cost for us, and to build some flexibility, because right now the floor plan in the new building hasn't been finalized yet. So we have to take it into consideration. There's some uncertainty, but our goal is to find the vendor to who can provide us with most flexible options and also achieve cost saving at the same time.
Okay.
Ms. Sun, I have a question. This is Fred.
Dr. Ferreris?
Yes, thank you, Mr. Raven. I'm trying to figure out how this falls into your purview, because you're like our security guru, right, for information and data. And I'm just kind of curious how this ties in with what your role is at the coordinating board.
Well, of course, security is always a consideration when we, during the procurement process, when we select the vendor. So encryption, data protection, and also, one option we're looking at is cloud-based fax services that will bring cost-saving opportunities to our agency. So all these aspects we will take into consideration during the procurement process, making sure that we provide appropriate controls to the security of the data that we have here in our agency.
Okay, thank you.
Anything further, members? All right, thank you. Do I have a motion approving the acquisition of a 4-year contract for managed print services?
I'll make a motion.
I have a motion made by Chairman Stedman. Second?
Second,
I'll
Fred.
second the motion.
Okay.
I'll second the motion. Any further discussion? All in favor say aye.
Aye.
All opposed say nay. Hearing and seeing no objection, the motion passes. Thank you.
Thank you.
Thank you, Ms. Sun. Agenda item 6A is review of the fiscal year 2020 financial report to the board. This item does not require any action. Mr. Ken Morton, Assistant Commissioner for Financial Services and Chief Financial Officer, will present this item to the committee and is available for question. Mr. Morton.
Thank you, Mr. Chairman and members. This item I bring to the committee every quarter. This is the last report for fiscal year 2020, which ended August 31st. A couple items. I won't go page by page. I've done that in the past, of which page and the meeting and the data, but I will provide a few key highlights and be happy to answer any questions. So, of note, this does include a portion of the 5% budget reduction, which the agency was mandated from the Governor, Lieutenant Governor, Speaker's office across all state agencies and institutions of higher education. Though the letter came in the latter portion of the year, we still were able to find around $14 million to reduce in our budget for that particular year, as well as the remainder in fiscal year 21. We did reduce our general revenue administrative strategies by 5% in fiscal year 20, so we were able to take the entire 5% in 20, which was great. Most of that was due to salary savings, timing of hiring, et cetera, so we wanted to be able to recognize that as quickly as possible. This does also include the bond sale that the board approved in the October meeting last year, that we closed in June, and we had new money issue, approximately $100 million to fund student loans for this academic year, as well as we refunded the 2010 bond series. Basically refinanced it. We issue new bonds to be able to pay off the old bonds. And the interest rate environment, it continues to be favorable. We do contemplate refinancing our 2011 series bonds, of which I'll discuss further in the next agenda item. Of note, this is the 2020 was the last year of the Be On Time loan program. We have two strategies in the report. We will not be reflecting those items in the report going forward because we will not be issuing new loans for nor do we have appropriations to fund loans in that strategy. In 2015, legislature put that program in sunset, only to issue renewal loans for students that qualified and continued to qualify, and last year was the last year of that program. So I'm happy to answer any questions you may have, and this item does not require approval.
Thank you, Mr. Morton. Members, do anyone have any questions?
What was our interest rate on the loans, or the loan refinancings?
On the bond refinancing, we had closer to 2%. We caught the market at a very optimal time frame when COVID hit, as you recall. So March, it really started to ramp. Things were slowing down. Investors were going to these are tax-exempt bonds, and they're AAA rated, so they're going to very favorable, high supported investments, such high grade, such as ours. And so there was a lot of demand for both the new bond issue as well as the refunding that we had.
All right.
So in total, we've saved, in the last 4 refundings that we've performed, we've saved $80 million in cash flow, in future cash flow, by being able to reduce our interest rate as well as reduce our principal by $39 million. So as we continue to build our bond portfolio, it helps us to slow down the rate of that increase in principal.
Great, thank you. Any other questions from members to Mr. Martin regarding this issue? Hearing none, we will move on to the next item. Agenda item 6B is consideration of adopting a resolution authorizing the issuance of State of Texas college student loan bonds in one or more series, and delegation of the authority for administration and approval of the activities necessary to complete the sale of the private activity bond. Again, we have Mr. Martin, we have Mr. Richard Donahue, partner at McCall, Parkhurst, and Horton, and Mr. Lee Donner, managing director with Hilltop Securities, Inc., will also be available for questions. Mr. Martin.
Thank you, Mr. Chairman and committee members. As you know, every year I come to you for a resolution to issue new bonds, and why do we do that? We have the College Access Loan Program. That program is a program that basically allows students to help finance their education, but of note, federal loans, students are only able to get so much in dollar amount on federal loans. So this is really a second place if you're going to a private institution, which it has been our highest growth in the past years. Students at private institutions, but some at public as well, as the cost of education and the cost of living goes up. So we issue tax-exempt bonds, private activity bonds. Those typically have a lower interest rate because the investor purchases them, does not pay federal tax on the interest that they earn, so they're willing to take a lower interest rate for that right. And that helps us by allowing us to keep the interest rate on the student loans lower. This resolution is for the issuance of up to $180 million of new tax-exempt bonds to fund loans for next academic year, not the one we're currently in, but this would be for the 21-22 academic year. As well as I mentioned earlier, it contemplates the potential to refund approximately $95 million of the 2011 bond series that remain. So when we structure our bonds, we typically structure them over a 24-year period. It was really multiple bond series within that structure. So we typically start with a 4-year bond, a 5-year bond, a 6-year bond, all the way through a 24-year bond. And every year we're paying interest, but then at the 4-year point we'll pay interest and we'll pay off that investor, that holder of that 4-year bond. And the 5th year, the same, all the way through 10 years. Typically we have a 10-year callable option on our bond issues. So that's why typically I'll come to you, and it's 2021, and we're able to refinance 2011 series. So if the market rate is favorable and allows us the opportunity, then we'll take advantage of it for financial reasons, and we'll basically issue new bonds at a lower rate and then use those proceeds. They'll go to escrow with typically use Wells Fargo as our paying agent, and then they will, at the optimal time on August 1st, pay off those 2011 bond series, and we recognize the savings in the future on the cost of our debt. I do have Mr. Richard Donahue, who is on the computer on the Zoom call, And I have Mr. Lee Donner, our financial advisor. They're both happy to answer any questions if you have them. I know we're behind in time. I'll ask Mr. Donahue just to speak to the legalese of the resolution, and then again, if you have any questions about market conditions, et cetera, Mr. Donner can speak to those.
Mr. Donahue.
Yes, thank you. For the record, I'm Richard Donahue, partner with McCall, Parkhurst, and Horton. We serve as bond counsel to the coordinating board. It is good to see you all again, if it's even if it's just virtually. The resolution you have in front of you is very similar to the resolution you've seen in years past. It is the official action of the board delegating the sale of the bonds. The actual pricing terms of the bonds will be established by either the commissioner or your CFO according to the terms of the resolution, in accordance with the parameters. As Mr. Martin indicated, there are only two purposes available for the bonds. One is refunding the Series 2011 A bonds that will be callable, and the $180 million of new money loans that would be authorized by the bonds. The bonds can be issued in one or more series, and we may end up pricing them at different times, depending on the market conditions and when we're able to go to market. The resolution delegation is good for a period of 1 year, so we could issue bonds anytime within that 1 year period under this resolution. The resolution also authorizes the bonds to be sold either by a competitive or negotiated sale. We traditionally have gone with competitive, and that's what the decision will be made based on market conditions, but I think that's what we'd anticipate here as well. The bonds will be general obligation bonds, as all your prior bonds have been, with the full faith and credit of the state of Texas behind them, although the bonds themselves in practice are paid solely from loan repayments. I'd be happy to answer any questions about the resolution or the bond issuance process if there are any, but that's the 10,000-foot overview.
And I'd like to make just a couple notes on the process for the bonds. The resolution basically starts that process, and for us the next step would be that we request from the state a portion of their tax-exempt allocation. The federal government provides a little over $3 billion to the state, and Texas Government Code Section 1372 then delineates how those funds would be allocated. We'd go to the bond review board and get a portion of that allocation. That starts our process. Now that gives us authority to issue tax-exempt bonds. And then we continue to work with the bond review board. We work to try and go to market. We'll get rating agencies to actually rate these bonds. In the past, have been AAA rated. We expect to anticipate the same, but we are required every time to go. And at the end, the final terms and conditions of the entire sale has to be approved by the Office of Attorney General. So the entire package will be sent by our bond counsel to the Attorney General, and then they will review and provide final approval before we can close on those bonds.
All right. Thank you very much. Mr. Donner, do you have any comments or no?
For the record, Lee Donner, Regional Managing Director with Hilltop Securities. Market conditions are outstanding at the time. Of course, we're a considerable time period out from when this transaction would be have all the appropriate approvals and cap allocation be ready to go to market. But the market has fully recovered from the shutdown in the early stages of COVID-19. As a matter of fact, this month may well turn out to be the highest volume of municipal bond sales on record. High-grade credits like this are particularly well received, as Mr. Martin indicated. The results of your refunding and new money this summer past were outstanding. Interest rates on your new money issue range from 0.6% in 2024, that's a 0.6% yield, to a high in 2043 of 2.60% yield. And the savings on your refunding were just short of $18.5 million on just that one refunding transaction. We have an election coming up. I think we fully expect that to produce some erratic behavior in the markets on a short-term basis, but almost irrespective of the outcomes of that election, the municipal market should settle back down by the end of the year, early into next year, and we see nothing on the horizon that would prevent this, both the new money and the refunding offering, from being very well received. I'd be happy to answer any questions.
Any questions for Mr. Donner? Mr. Wilson?
Thank you, Chairman. So you anticipate the refunding of these bonds in the early next year, or when would this occur?
Yeah, the timing, the refunding would occur in May, and that's limited to our authorization in Texas Government Code, Section 1372, that gives us 150 days after we get approval, which we would hope be around January 1st. So we need to go to market and close before the expiration of that. But the new money we would extend out to July, because these are intended to be utilized for the next academic year, so we don't want to close too early and then be sitting on accruing interest when we're not able to deploy that equity.
And the source of repayment for these bonds comes from repayment of student loans, or?
That is correct.
And then do we have to the event there are defaults, do we have a put to any entity to cover us off, since we're making non-credit loans?
Well, these are credits. So the students, borrowers are signing promissory notes, et cetera, on these loans.
Right. No, I understand that, but I mean, do we?
But we do not have puts to offset risk. We do typically run $30 to $40 million favorable each year from cash flow from the repayments coming in versus the anticipated bond debt service that we have to pay each one of those years.
Got it. All right. Thank you, Mr. Chairman.
Thank you. Any other questions for Mr. Martin or Mr. Donahue or Mr. Donner? Seeing no further questions, do I have a motion to adopt a resolution authorizing the issuance of State of Texas college student loan bonds in one or more series and delegation of the authority for administration and approval of the activities necessary to complete the sale of the private activities bonds?
Emma Schwartz moves.
I have a motion from Ms. Schwartz, a second.
Second by Fred Farias.
Second by Dr. Farias. Any further discussion? Seeing no further discussions, all in favor say aye.
Aye.
Any opposed? Hearing and seeing no objection, the resolution passes. Thank you, Mr. Martin. Agenda item 7A is an update on internal audit reports and activities. This item does not require any action. Mr. Mark Pale, Assistant Commissioner, Internal Audit and Compliance, and Mr. Paul Mayart, Assistant Director, Internal Audit and Compliance, will present this item and are available to answer questions. Mr. Pale and Mr. Mayart.
Thank you, Mr. Chairman. Good afternoon, members. For the record, I am Mark Pale, Assistant Audit and Compliance. We've completed 4 engagements since the prior meeting in July, and those reports are in your materials. I'm happy to report that these were no findings reports, or what we call Category 1 reports. So that's a positive thing. I want to let you know that some important subject matter that we've covered by this work include the agency's bond program, which you just heard a description and some conversation around. We also looked at the human resources functions administration of a program called the Optional Retirement Program, which is a program that the agency has responsibility for administering, and it's statewide in scope. It picks up many participants from higher education institutions across the state. Again, a no findings report there. On the follow-up front, we had good resolution of prior internal audit recommendations that we looked at, and we have some summary of that follow-up work in your materials. And then lastly, we have a summary report for fiscal year 2020. This report is required by the Texas State Auditor's Office, and it contains information previously reported to you throughout the year. So I won't go over that report, but I will be happy to answer any questions that you may have about any of these matters.
Any questions for Mr. Pale? Mr. Mayor? Do you have any comments?
I'm good.
All right, thank you. All right, thank you, Mr. Mayor, Mr. Pale, and Mr. Mayor. Any questions? No, seeing no questions and hearing none, we will move on to the next item. Agenda item 7B is a discussion of an audit report on financial management processes at the Higher Education Coordinating Board by the Texas State Auditor's Office. This item does not require any action. Ms. Lauren Godfrey, Audit Manager, and Ms. Amadou Guidi, Managing Senior Auditor from the Texas State Auditor's Office, will present this item and are available to answer questions. Ms. Godfrey and Ms. Amadou Guidi.
Good afternoon, Mr. Chairman. My name is Amadou Ngaide, and I was the project manager for the audit of financial management processes at the Higher Education Coordinating Board. And as you mentioned, with me today is Lauren Godfrey, an audit manager for our office, and we'll be discussing the results of our audit. Overall, we concluded that the Higher Education Coordinating Board complied with the requirements for allocating and distributing Texas grant funds to institutions of higher education for fiscal year 20. The purpose of the Texas grant is to provide financial assistance to eligible students attending Texas public institutions of higher education. In addition, we concluded that Tarleton State University and the University of Houston downtown administered the Texas grant in accordance with the requirements by awarding Texas grants to eligible students. Both universities had sufficient controls over the information systems that maintained Texas grant student financial aid data and eligibility information. This audit also covered the coordinating board's activities related to its contract with Nelnet Servicing, LLC, for its loan management system. The contract had an initial value of $3.5 million and was later amended with a new total value of $5.4 million and an extended term to end June 2021. The coordinating board planned, procured, formed, and monitored the contract in accordance with most applicable requirements. However, it should verify that disclosure forms are consistently completed. We have rated 3 chapters as low for this audit, meaning that the audit identified strengths in the audited processes, and 1 chapter was rated as medium, meaning that the issues identified could moderately affect the coordinating board's ability to administer its contracting function. In chapter 1, the audit determined that the coordinating board adopted rules for administering Texas grant funds as required by the Texas Education Code. For fiscal year 20, the coordinating board allocation of $433.2 million in Texas grant funds to 42 institutions of higher education complied with those rules. In addition, that allocation formula was supported by the financial aid data that institutions of higher education reported to the coordinating board and was consistently and accurately applied. In chapter 2 of the report, we concluded that Tarleton State University and the University of Houston downtown administered the Texas grant in accordance with the Texas Education Code and the Texas Administrative Code requirements by making Texas grant awards to only eligible students. In chapter 3A, the audit found that the coordinating board administered the audited contract in accordance with applicable statutes and the state of Texas contract management guide. Specifically, the coordinating board performed the contract planning activities necessary for determining the contract objectives, identifying the appropriate procurement methods, formed a contract with all key provisions required by the state of Texas contract management guide, and monitored the contract deliverables. Finally, in chapter 3B, the audit determined that the coordinating board did not ensure that all members of the bid evaluation team and contract management personnel involved in the audited contract completed the required disclosure forms. None of the 10 employees, which included 9 bid evaluation team members and 1 procurement manager involved in the procurement of the audited contract, signed the nepotism disclosure forms required by Texas government code, which increases the risk that the coordinating board may not identify and, if necessary, mitigate potential conflicts of interest. We performed limited procedures and did not identify any potential conflicts of interest. And this concludes my presentation. I'll be happy to address any questions that you may have.
Thank you, Mr. Guide. Any questions for Mr. Guide? All right, and seeing no, I'm sorry, Mr. Chairman.
So, Mr. Guide, I guess I don't really understand about they didn't sign the forms. But just in general, is this, I mean, I know, the statute that you referred to says that you have to sign the forms, but is this a major concern of yours? In other words, does this reveal something that that the board needs to pay attention to, or this committee needs to pay attention to with respect to the agency?
No, not necessarily. The form is required by the Texas Government Code. When we did the testing, we determined that the coordinated board was not able to provide for that specific contract and for those specific employees that we tested the required signed nepotism disclosure forms. But we did, however, perform additional procedures just to verify that there wasn't any conflicts of interest, and those limited procedures did not reveal anything else.
Okay, thank you.
Ms. Godfrey, any questions, any comments?
Nope, I'm just here to answer any questions if I can.
All right. Hearing none, thank you both very much. Since there are no other questions, we'll move on to compliance monitoring. Agenda item 8A is an update on compliance monitoring reports and activities. This item does not require any action. Again, we'll have Mr. Pale and Mr. Maillard. Gentlemen.
Thank you again, Mr. Chairman. For this last item, importantly, the last item, I will ask Mr. Mayor to provide the committee with a brief synopsis.
Thank you, Mr. Pale, and thank you, Mr. Raven. We completed 7 projects since our prior AOC meeting in July. Each of these reports are included in your materials. Just one of the engagements had reportable findings and recommendations. That engagement was from Huston-Tillotson University, and it resulted in 2 observations. There was one finding related to information technology and one finding related to non-compliance with TEG eligibility from that engagement. Details of the observations are noted in the report. The university agreed with the observations and has proposed corrective action to remedy the issues that were noted in the report. And once again, it's a short report. Things are going well, and that concludes my compliance monitoring update. Happy to answer any questions that you may have.
Thank you, gentlemen. Members, does anyone have any questions for Mr. Pale or Mr. Mayor? Seeing no, hearing nothing, and seeing nothing, we will move to the final agenda item. Thank you, gentlemen. This concludes, Mr. Chairman, this concludes the Agency Operations Committee meeting. The time is 1:36. Do I have a motion to adjourn?
So moved, Emma.
Second, Fred.
Motion by Ms. Schwartz, second by Dr. Farias. All in favor say aye.
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 Aye. Hearing no objection and seeing no objection, the motion passes. Thank you, Mr. Chairman.